It's Tuesday, October 18th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist with New Wave Forecasting. No really big surprises in the markets here today. Starting off with crude oil on this courtesy triangles consolidation here. I detailed why this should be a bullish continuation pattern, and it is certainly playing out that way so far. I guess the question is whether or not it's already complete, and it is possible that the market already did complete the 5-wave swing necessary and terminated triangle, but I'm not convinced. I think we might have a situation here where we run up, test 51 bucks, and come down one more time. But again, the plan has always been for the market to continue out the top of this pattern and head up towards 52, 52.50. No changes, looking better as the market does better. Okay, moving on towards nat gas. This is the little bit bigger time frame, just to give an idea, again, what I think is supposed to be going on here. We are in the nebulous B-wave land, which is very difficult. Anything could happen, but at some point we should trade at least down into 316. Whether it happens tomorrow or Thursday, report day, I don't know, but I do not believe we have seen the end of the run. But this is not by any means an easy situation to deal with. And if we drop time frames a little bit, you can see how we did have a bull trap above 330 that I did note on the intraday update. Now prices have come right back down, the 320, just below 326 here, testing what the previous bear trap and the 76% retracement. I'm going out on a limb here suggesting that this is probably a courtesy dip and that the market is probably going to rally into the report and still trade back up towards 333.5 before heading back on down towards 316. So again, lots of conjecture here, but basically looking for the market to trade up and then down before moving well above 340 in the distant, not too distant future. Okay, turning our immediate attention to the gold market. You know, the short-term forecast has been working really well. I said we should head back up here into the 1262, 1260 something, and we are there. Now, this really needs to be it for this bearish scenario to prevail. The market keeps on going here above 1267. This could turn out to be a much more bullish scenario here than what I'm giving it credit for. But I am not giving up on the bearish assessment yet because it is still totally valid, viable, and seems reasonable enough to me. So I thought the market was going to turn down today pretty clearly. If it's bearish, I say it's now got to be tomorrow. So gold needs to reverse tomorrow, and it could come from above 1267, but probably not. But again, watch for a hook. This is a great place for a bull trap to set up here above 1265. I have to rotate some label action here, but the scenario is just not going to change in the euro. You just want to only use every rally for now to be viewed as a courtesy opportunity and, you know, cover into new lows because there's no way of knowing just how much further the market's going to fall. But again, I don't want to sell into weakness here because there may be no downside. But again, the long side of the market's pretty risky. Although on a risk reward play here, it wouldn't surprise me if the next 50 pips were up. But I still want to be looking to use a move above 110.50. I think would be an opportunity. Looking at it as a courtesy rally opportunity. Well, once again, the work on the 10-year appears to be coming together. I've been bullish here for the last couple days, and now we're starting to look good. We are nearing the first target of 130.30, although I kind of thought the market was going to do it in a much more auspicious manner, but higher is better. So we'll see. I guess if we break 129.30, we'd have to be concerned here. But I like the fact that the modified moving average is now taking control here, and that's somewhere in the vicinity of 130.06. So I think as long as we hold there, we're looking pretty good here. Bullish 10-year call, looking strong. Stand with it. Okay, turning to the E-mini S&P, which was up today in line with the daily video commentary last night. But, you know, it didn't take out the previous peak here, which the NASDAQ did. So we can say for sure that at the moment the E-mini S&P is less bullish than the E-mini NASDAQ. And that might suggest that the 62% retracement first target at 2147 may just be it. So we'll see. Again, not to be better to be trading the NASDAQ from the long side than this one, but higher prices look likely still. And 2157 is this 76% retracement. I don't think we're going to fall below 2120 today. If we do, we'll certainly talk about it on a real-time update. And finishing off here with the E-mini NASDAQ. Quick update today because pretty much everything is in line with what it's supposed to be doing. Don't have any broken forecasts, so none are going to get fixed. I think we're looking at some kind of a weird double zigzag situation here in the E-mini NASDAQ, and I believe this is the B-wave presentation here of the final leg up towards 4870, 4875. So I've got to view this as a courtesy dip here. Notice there's no momentum divergence here. This is actually a pretty good rally. So again, prefer to be playing the NASDAQ from the long side than the S&P at the moment, but they both look near-term higher. Just think that the better play is the E-mini NASDAQ. The modified moving average is somewhere in the vicinity of 4810, so that's probably also very close to the 76% retracement, which is actually nearer to 4800. But I don't think the market should dip quite that much. That might allow too many people to come in. So still like this one. I think we are looking at another courtesy dip situation here for a play up and a much more significant courtesy rally setup, which could lead to a 100-point move conceivably. We could drop in 5 waves from 4875 down towards actually 4725. So we could be looking at a 150-point setup here in the E-mini NASDAQ if we're going to get an ABC decline in the next 4 or 5 days. It's going to happen fast if it's coming. So that's it for me, Ron Feinstein. New Wave Forecasting, October 18th, 2016. Real-time forecast update tomorrow, and tomorrow night, daily video.